It has been over a year after Miss Flora's decision to expand her flower store, and she has over 10 stores across the world. To manage this growth, she converted her business from a sole proprietorship to a public limited company. This has drawn the attention of investors and the public as they now want to acquire shares in Flora PLC. But before an investor makes a decision on whether or not to invest in Flora Limited, they must evaluate the profitability of the shares. This can be done using the investment ratios. This lesson will teach 4 types of investment ratios: the earnings per share, the price earnings ratio, dividend cover, and dividend yield. We will start with the earnings per share of Flora PLC. As a prospective investor, you would want to know how much profit you would earn for every 1 share you acquire. This can be calculated by dividing the net income with the number of shares. After knowing what you earn for each share you acquire, the next thing is to know the price of this share. The price earning ratio calculates the price of each share in Flora PLC that would earn the investor 1 naira. Investors would need to know the price earning ratio to ascertain how many shares they would acquire. It is calculated by dividing the price of a share by the earning of a share in the previous year. Another important factor prospective investors will consider in Flora PLC is the rate at which the company pays out dividends. Dividend is the portion of the profits that the company distributes to its shareholders. An important measure of the rate at which a company pays out its dividends is known as the dividend cover. It is calculated by dividing the profit after tax of the company by the total amount of dividends paid out. It may also be calculated by dividing the earnings per share figure by the dividends per share. By now, you know that shareholders get a return on their investment in the form of dividends. An investor may be interested in knowing the rate of return that would get by investing in Flora PLC. To do this, they would need to calculate the dividend yield on the shares of the company. It is calculated by dividing the dividend per share by the share price and multiplying by 100%. And that's it. You have learned that investment ratios are used by investors to analyze a company before investing. You also know 4 ratios used by these investors: the earnings per share, the price earnings ratio, the dividend cover, and the dividend yield. In future lessons, we will look into some other ratios. See you then.